beforehand, you said Japan has a very important role to play in kind of what's going on between the stablecoin fight versus the eurodollar fight. And when it sounds to me like when you talk about what's going on with Europe and broadly offshore, right? Anything offshore, they're going to be running into some issues. So how does Japan tie into
Mhm.
this, and why are they so important in that kind of debate between stablecoins versus what's going on with this offshore dollar?
So the offshore dollar, think about this. It's just a patchwork of connected liabilities. Your dollar is just someone else's liability. There's nothing in between. Um, and it ultimately comes down to your dollar is only as good as your counterparty, right? In that framework, you've got monetary tiers. And this is where Japan's situation comes in as the next battle theater. It's been an open battle theater for, I mean, ever, but like when I say forever, like post World War II, right? But in terms of like where this battle line is moving, like it used to be Iran. I think the next stage for this, process that's working out, the transition from the offshore eurodollar to this stablecoin dollar future, um, Japan just makes sense as the next key battleground. All right, so we know with the backdrop for Japan, it has to import its energy commodities. It's huge on the international trading market. Basically, $1 trillion of exports, $1 trillion of imports. Like it takes low value added commodities, transforms them inside of its economy into like high value added goods like Toyotas, semiconductors, et cetera. And that's the name of the game for Japan. It's also important, won't go into this here, but it's actually your key entry point for financial integration for the DC and New York kind of power center, integrating into Southeast Asia as that
Right.
Pax Silica growth nexus or like key supply chain nexus for this 21st century future that the American-led order is that's the vision to build that thing out. But what we're seeing in Japan under the old framework in this euro dollar market, this offshore dollar credit market, which still dominates, it's the bigger thing in international trade. That's changing as we speak. We're at that point when, gradually turns into suddenly the Malcolm Gladwell tipping point, type of thing takes effect, and it'll be a big shift when that moment hits, and it's still in front of us, in my opinion. Um, but if you think about Japan's task in front of it, it does have a trade imbalance. It hasn't been able to maintain the same surplus of net exports, right? Where it used to be able to generate dollar flows from exporting more than it imported. That's flipped under like post 2008 largely, and that's a problem for Japan. Why? It has to access international commodities like on this open pool. It has to compete. No one takes yen. Yen is the currency of the realm for those, the four main Japanese islands. I can't go anywhere around the world and they're not going to take Japanese yen. It's just the nature. The world still wants the dollar. And that's not changing in my opinion. So because they can't, these energy, imports, they're invoiced in dollars. The producers want dollars. Japan has to access dollars, and the way they do that, if you're the Tokyo Money Center banks, what you do is your domestic industry, they measure their balance sheets in Japanese yen, but they have to like to buy the barrels of oil. Their banker has to sell yen, buy offshore dollars in this global FX cartel, which is like the SWIFT network, all of that, the offshore dollar IOUs, the FX currency pairs. You have to tap into that liquidity pool. Um, and then ultimately to settle in dollars, this euro dollar system, they need the highest quality credit, like say it could be Fed reserves, but if they don't have a U.S. banking franchise present, they don't have access to the Fed, and the next best thing you can get is a Treasury or a Treasury bill
Right.
custodied at the FRBNY, but that's your dollar IOU. But to get it, you have to go through two hops. This is Cameron's slide. I went out of order, but it's slide 11, like to visualize this.
Yeah.
The old world, you got to go like if you're Japan getting your oil imports, you got to go through two layers to get to the U.S. Treasury, which is like that's in terms of monetary tiers, that's your pristine dollar claim. Next, you get these offshore dollar IOUs. Last, you get your Japanese yen local currency. So you got to go to as in the yen economy, you got to go through two hops, and then you have to pay a vig to this FX franchise out of London. And we can see with in this new world where Japan can't export its way to growth, and backstop its domestic financial system and economy. They need something else. Otherwise, this ends in a hard brick wall. And that's where all the panicans, coming in, the JGB sovereign debt market, yields rising, the yen. You can look at this. I'll backtrace two charts, Cameron. Yen at 160, the soft line in the sand. You're seeing it come under threat again, already like a multi-decade kind of weakness for the yen. We're back at that point where, the moment of crisis, when it comes in the global FX markets and the global dollar, um, Japan is not, on top of its skis, so it needs help here.
Right.
And then second, you're like, why else? Where else do you see this? Next slide, camera slide 10. Yen versus gold, right? This is telling you like Japan doesn't have natural like gold deposits or resources. It has to go like if its banking system wants to use gold as reserves, as a base money, they don't have it. They've got to go get it as well, so that they can't just print yen on top of the gold. And this is what you see in the gold chart. You see that exponential blow off. We've hit this window. This is the quarterly going back, 20, 30 years. So we can see where we started from with the deflationary bubble collapse in the 90s when the Nikkei just bubble collapsed and we had this multi-decade recession and depression, call it that. It was a great depression. If you were say a 40-year-old Japanese man in 1990, like the last, the 1990 to 2015 period felt like a depression to you, for the most part. But you're seeing this on the quarterly. If we put the chart on gold up there, you're seeing that liquidity taking show up as this commodity tightness situation uh, was like forced to the forefront. U.S. held the control of the escalatory, pushed it here, and you've seen the Japanese now. They've got to defend their access to the dollar to import these commodities. That's created a retracement, a consolidation that's just opened up in the second quarter candle for gold on this chart. So you're seeing it in the gold price chart in Japanese yen as well. So back to Cameron's side 11 here. Now the right side of this is where the stablecoin battle becomes front and center. I think this coming, it's not a battle for Japan because there will be no military action here, like Iran or Venezuela. This phase of the battle in Japan is just purely in the capital wars arena, or the capital markets arena, in this bigger picture, geopolitical conflict era that we've entered. I don't know, some point in the last 5 to 10 years, as it's been building up. But so the problem here, we talked about it on the old map. You got to go through, if you're the Japanese domestic financial system, what you want to get down to is your dollar claims, your T-bills at the end of the day, as money to import your barrels of oil. With stablecoins, we now have an infrastructure where the Japanese financial system can access a one-to-one claim on a T-bill, like a T-bill dollar, that they can settle these transactions in, and bypass the vig of the Belgium-centered SWIFT framework and system, right?
Yeah.
This won't solve the problem overnight, but this is part of the big reshuffle going on in the commodity supply chains themselves. Those access to the production centers like the Persian Gulf that the European leaders are admitting, like, oh, we lost this one on. Like they took the took the degradation out of that front on the kind of the actual goods side of international trade. Now the complement of that is the financial system, and now Europe's going to get like they're going to take the punch in the face on that side as well, right? Like, does this make sense? So
Yeah,
you
yeah, you're
now for
losing
your
this
Japanese
entire
banks.
business basically.
Yep. Yeah. So Europe lost this franchise as well. They got hit with the double whammy, both the financial settlement as well as the actual supply chains themselves. All right. So this is going to be massive, in my opinion. So you think about the $3 now. You got your onshore dollar that has an ability with the Fed, the treasuries, the banking system, all of that. Think about these dollar IOUs. They have to maintain 100 cents on the dollar, right? And if you can maintain the purchasing power of your dollar IOU, um, you have more access or better purchasing power of these energy resources that everybody is competing over. So think about the onshore US dollar. Number one, we produce a lot of oil now, like LNG. We have more LNG, we have more natural gas than we can export. And this is where like LNG contracts for the United States are going to be a big growth market. But for Japan, it's not, right? All right. So onshore USD, I don't have any kind of qualms that, that system, that framework can defend its 100 cents on the dollar. And then these stable coins as well, they're backed up by that 45-day or less T-bill, like the closest you can get to that Washington, D.C., New York nexus, where, I mean, you can say where the money printer emits, but that's just reality. Um, so now, if you're the Japanese market, you can do one hop, or you can operate on this new rail and pay for your commodities with a dollar outside of the legacy offshore dollar system, but it's going to maintain 100 cents on the dollar as well, right?
Right.
You'd have to attack the T-bill market, sell off, create a liquidity squeeze, and it's going to be very hard to break, in my opinion. Now it can, and we'll go into the Tether chart in a second. It's still gonna ebb and flow with the overall liquidity needs in this offshore credit dollar kind of capital pool that is still much bigger than the stablecoin pool. But by and large, for the liquidity mechanisms, the creation redemption, you've got a really strong mechanism here as Japan integrates these stable coins into its domestic financial system. Um, this will, all else equal, if you have to try to pay for your barrels of oil imports in IOU credit euro dollars, maybe those get 98, 97 cents on the dollar, et cetera. And then to bring them back up to par, you've got to pay higher rates. So this is where like increase your yield, your short-term yields. Otherwise, the discount will still persist. And this is where that money market slide we went through is the admission, and the European admission in slide one we went through. They need rates lower because there is no demand for
Right.
borrowing
Yeah.
in the private sector of the economy. So entering this next stage of the conflict, this U.S. led order, I think, has the wind at their sails, the positioning. They've chosen the time and place of the battle. This is Scott Besson in my mind, who is ultimately the general running the show here. But the military quotes, like, if you can choose the time and the place where the battle, it takes place, that's probably half the outcome,
Right.
right?
Right.
Come up with a Sun Tzu quote or something like that. It's been there in the art of war. They've known this forever,
Right.
but we've got that advantage going in. All right, so that's why the stablecoin rails matter. This is going to be huge. It's just starting out. June 1 is when the process begins, and the payment inside of the Japanese financial system can start taking place on these dollar stablecoins. It still means that Japan has to actually keep exporting to get these stablecoins in the first place. But as this trend goes on, this flywheel, like, it's just tightening the noose around the old offshore eurodollar, and the economics, the incentives, like, network effects. When you add Japan into this system and they want to see its growth continue, well, Japan coming on board because it's got its own pressing problems, this helps solve their problem. Well, next is like, well, Venezuela, you've got similar problems. Can this help you? Well, we got a second participant.
Yep.
Well, who else? Argentina. All right, come on board. And the network effect just, tilts towards the new paradigm of the monetary transition that Basent is leading us down, and away from that old Eurodollar framework, which is no longer long for this world.
Super important to
Um,
understand. Yeah.
yep. All right. So let's just talk about really quickly and then get out of here. What we're seeing in terms of liquidity conditions within stablecoin markets
I was
themselves,
going to
right?
ask, like,
And
how does
this
this
is
compare against the Tether piece that you brought up beforehand? So, yeah, perfect. Let
all
me
right.
pull this that slide here. So you have this,
So
and we're breaking the buck on Tether. Matt, yeah, explain what you're seeing.
So after the ceasefire announcement between the U.S. and Iran on April 7th, we were already like coming into a point where like the dollar liquidity was on the rise. When I say dollar liquidity, like take all three of these dollars into account: onshore dollar, offshore dollar, and stable coins. You can kind of see it in the charts here. If you, I'm just gonna increase my screen so I don't mess this up. Like basically from February 27th up until mid-March, what this price is, it's Tether's exchange rate. So you talk about stable coins, and then they're trading for credit IOU dollars or offshore dollars, euro dollars, right?
Yep.
And what this exchange rate is actually reflecting is, like, you could say two things: demand within this whole crypto ecosystem as like an intake for excess liquidity. This is like, okay, if you see this Tether stablecoin versus offshore dollar exchange rate rising, that's telling you the system is taking in liquidity from monetary creation or just positive liquidity backdrop within this global credit capital market itself. And then on the other side of that, when you see this thing trending down, that's telling you something else is going on. It means liquidity is being pulled out of the stablecoin uh, capital pool and going back in to the money supply of the credit dollar framework. So what's actually happening here? So since um, really May, it starts right the month of May open. You can see this trend. It's down and to the right on Tether's exchange rate versus dollars. It's broken the buck. This is Bloomberg's pricing services, but if you look at other like Coin Market Cap, the crypto exchanges, you can see it even below. Like I saw like 98 cents on the dollar for these stable coins. And just keep in mind, this existing Tether outstanding is the legacy Tether. It's not the
Right.
Genius Act, like 45-day and below Tether, which comes into effect. I think it's already out. It's like the USAT. I don't know. It's got a ticker symbol, but you can get the Genius Act version that is reserved 1-to-1 with T-bills, regulatory compliant with Washington, D.C. and New York. And then there's the legacy one, which, is the old thing. But what you see, the liquidity taking from this tether pair trends down. Bloomberg shows it 99 cents on the dollar. What that's reflecting, in my view, so think about what we saw in U.S. money or onshore money markets, the rush into T-bills. What that's saying, the supply of dollars exceeds the demand for dollar borrowing in this whole offshore dollar complex. What Tether is showing is the because it's broken the buck from below. Um, that is the demand for dollars pulling into that euro dollar credit system is is dwarfing that. Like there's no excess liquidity creation, which confirms what I said earlier about there's no demand for new borrowing, right? So this is telling you the liquidity trend, it's working against that like it's turned the direction on that impulse we saw from April 7th onwards, where we got that massive torque and risk assets, QQQs, et cetera. Bitcoin had an underwhelming kind of jerk on its chart upwards versus like your AI, semiconductors, memory, equities, all of that we've seen on the chart. Kospi, right? Samsung, SK Hynix, all of that. Um, so what we're seeing in Tether is actually confirming, like moving towards this tightening process that both your European leadership is acknowledging their fate for, like what's coming down the pike, and then Japan as well. You see it in their activities. Cameron, if you go back to slide 8, what have you seen from Japan to prepare for this? They, number one, because they've got to import commodities, they can't. Someone's got to print the dollars and do the new money create, or take on, some borrower has to take on that new money creation. Well, the Takaichi government unveiled it's 19 billion is going to come from extra government borrowing, and they're just going to have to manage the FX, the JGB bond market against that, and then they're also building up reserves, like their dollar reserves for this defense. So this June 1 stablecoin implementation, like it's not going to solve the thing on a dime. Um, all Japan has to do, and I'd say when I say Japan, the US led order as well, like this is the key battlefront. If Japan stays upright throughout the summer, that's going to be a meaningful step in this broader US led monetary transition story. So I'm going to end it here because if you want to go double click deeper onto that, I just recorded a podcast with Tom Luongo on Tommy's podcast earlier this week where we talk about this and the big picture. It goes 2.5 hours in. I think it gives a good download to understand everything going on with the stable coins and this transition away from the offshore to the treasury supremacy version of the dollar, what this means, all of that. But we've seen key development this week that to me say the next logical, sense for this action to take place, like the next step in this theater, I'm watching Japan closely. So hopefully that gives kind of a framework for people going into it. Like everybody's going to face this pressure as the sovereign debt situation, this abrupt repricing, as the ECB financial stability report told us they expect is coming. Every market is going to have to deal with this, and everybody's going to face that problem. But from the U.S. standpoint, if they can get their ally here, who is integrated into their orbit, their vision of what's being built out here, Pax Silica, the stablecoin transition to the dollar, all of that. All we have to do, like if I say we here, because I think of myself, I want American sovereignty to persist through this, but all that perspective has to do to win here just means don't let Japan fall on its face. And I think we got the architecture to get it done. So that's what one of the things I'm watching for this summer. But America 250, the semi-centennial is starting as well. World Cup. There's going to be a lot of distractions, but inside of the capital market war, this Japan story is the next chapter. I'd say let's keep our eyes on.